Investors, hello! This is Stock AI Insights Earnings Analysis, and I'm your Chief AI Analyst. We're about to break down GitLab's latest quarter.
First, just a quick reminder. This is for educational reference only, and it's not investment advice. Investing always involves risk. Okay, with that said, today we are parsing GitLab's third quarter fiscal year 2026 earnings, which they released on December 2nd, 2025. The big headline here? A 25% jump in revenue. So let's dive right into this. Here's what we're covering today. We'll start with that top-line revenue growth. Then we'll dig into the profitability picture, take a look at the company's future investments, and finally, we'll break down the key business risks they've identified themselves.
All right, first up, top-line revenue growth. For a company like GitLab, this is the number everyone's watching, right? It really tells us how much demand there is and how well they're capturing the market. So, the big number for the quarter? $244.4 million. That's the headline figure.
Now look at this chart. That $244.4 million, well, that's a solid 25% increase from the $196 million they did in the same quarter last year. So where's that growth coming from? According to their filing, it was primarily driven by ongoing demand for their DevSecOps platform, bringing on new customers, and also getting their existing paid customers to expand how much they use the platform. Pretty straightforward growth story there.
Okay, so GitLab's revenue engine is definitely accelerating with that 25% growth. But if we look over at the dashboard, the profitability gauge, well, it's still flashing red. Let's take a look at the bottom line.
For the quarter, the company posted a net loss of $93.5 million. And yeah, those parentheses mean it's a loss. This is super important because it shows us what it cost them to achieve that impressive top-line growth.
But here's where it gets really interesting. Take a look at this chart. Yes, it's a loss, but that $93.5 million loss is actually smaller than it was this time last year. So while they're not profitable yet, the key takeaway here is that the losses are shrinking. And for any investor tracking that path to profitability, that is a huge data point.
So you're probably asking, why the losses then? And that leads us right into our next section, the company's future investments. You see, those losses are directly connected to where GitLab is strategically putting its money to fuel that future growth.
And a filing lays it all out pretty clearly. They are pouring cash into a few key areas. They're continuing to invest heavily in R&D to make their platform better. They're ramping up sales and marketing to grab more customers around the globe. And here's the big one for me. They're pushing hard to incorporate more artificial intelligence features. They also mention they're on the lookout for potential acquisitions. I mean, this is a classic growth stage playbook, right? Spend big now to build a stronger, more dominant business for the long haul.
But to get the full picture, we can't just talk about growth and exciting investments. We have to look at the other side of the coin, the potential roadblocks. So for our last section, let's dive into the key business risks that GitLab's own management is flagging in their filing. Okay, so the company points out a few major challenges. First, there's intense competition. We're talking about giants like Microsoft and Atlassian. They also admit that keeping up this crazy high growth rate is tough. But, as your Chief AI Analyst, two things really jump off the page for me here. One, the challenge of hiring and keeping top-tier talent, especially in AI. And two, the specific risks that come with implementing artificial intelligence itself.
And wow, this quote from the filing really drives that point home. They state, and I'm quoting here, "The implementation of AI and machine learning technologies in our services may result in reputational harm, liability, increased expenditures, or other adverse consequences." I mean, that's a pretty stark warning. It tells us that while AI is a huge bet for them, it's also a brand new frontier of risk. Everything from the AI giving bad outputs to potential legal headaches.
All right, so we've looked at the revenue, the losses, the big bets they're making, and the risks they're facing. What does it all boil down to? Let's get to the verdict.
So here's the data-driven summary. GitLab's Q3 filing shows strong top-line growth fueled by platform demand, but the path to profitability requires navigating significant investments in AI and intense market competition. It's that classic growth versus profitability story with a major AI twist. Share your thoughts in the comments. See you next time.